You might recall yesterday we told you that OPEC agreed to extend production cuts for 9 months to keep oil prices from falling too far. Today, its non-OPEC partners said that's a good idea, and they agreed to that extension. But that did not stop oil from falling nearly 5% today on fears of slowing global demand. Brian Sullivan has more from Vienna.
The morning of day 2 here at the OPEC meeting was dominated by Russia, and their extension of the 1.2 million barrel per day cut aligned with OPEC, also bringing the nation closer to the cartel. But the news came later on in the afternoon as well, when CNBC landed an interview with the oil minister of Saudi Arabia, Khalid al-Falih. And we diverted from the OPEC topics to go on to broader information. Specifically, I asked him about the expectations in the market that global economies were at risk of slowing down, and thus oil prices may fall. He disagreed with that and thought that all the stimulus the Fed and central banks are providing should help boost economies in the second half of the year.
I see it the other way. I think these stimulus steps that are being done by monetary authorities are precautionary in nature, but they're certainly going to have a positive effect in terms of fueling economic growth. I think the fact that we've had soft prices for oil and energy in general is also another stimulant for global energy demand.
The other big topic that has been facing oil and gas investors in the United States, of course, has been the idea of debt, that many of the biggest oil and gas companies, specifically those in the Permian Basin of Texas, simply have too much debt to continue on long term. It has been a growing theme in the market as of late, which is why oil and gas stocks have not performed well. And I asked him, what does he think about debt levels in the Permian? And he did express some concern.
Well, definitely they have not been generating enough cash flow to their investors. And I know that's impacting the appetite for investors to continue putting money into unconventional resources. So the combination of infrastructure, which has constrained, the combination of service industry constraints, financial constraints, as well as the unknown constraints of geology will ultimately bring us back to reality that there has to be a plateau and ultimate decline.
Those words may not be too comforting to U.S. oil and gas investors or the companies themselves. So while we leave here the OPEC meeting in Vienna, Austria, the focus will be on the group's longer-term future, its tie-up with Russia, and maybe some concerning comments about debt levels among oil and gas companies in the United States. For Nightly Business Report from Vienna, Austria, I'm Brian Sullivan.